All right, welcome back. Now let's talk about the types of trading we have in the Forex market. Now, when I was explaining to you, I said we have the bull market, we have the bearish market. Bull market is when the market is going up, bearish market is when the market is coming in. But I want you to know this very importantly. Now, the market does not move on a straight line when it's moving. No. What you find is the market goes this way, it goes up a little, retraces a little, goes higher, retraces, and then come higher. This is how the market actually moves. It doesn't move on a straight line, okay? Very important for you to know that. Now, we have three types of traders when it comes to the views. So say, for example, you want to trade and leave your trade for like a week, 2 weeks, 3 weeks. In fact, some people leave their trades for like 3 months, 1 year. Now, the way you're going to make your analysis is a little different from someone that wants to trade in a day and pick their profits in a day. So, for you that you want to trade and leave your trade running for, say, like a year, 5 months, 6 months, 3 months, we call this position trading. That is trading on a very long time scale. Position trading. Now, when you're position trading, the time frames or the view you want to have, you want to concentrate on the higher views. So for position trading, the time frames you usually use will be monthly time frames. You would want to use daily time frame, and then you use, let me do it this way, you use weekly, and then you use weekly, and then you use daily. Okay, so that would be your view when you're trading positions. You look at the weekly. By looking at the weekly, I mean you look at what the market is doing on a weekly basis. So instead of looking at what the market is doing for the 5 minutes, every 5 minutes, or every 3 minutes, or every 1 minute, or every 10 minutes, no, you're not going to concentrate on all those things. You concentrate more on what the market is doing on a weekly basis, on a daily basis, on a monthly basis. That is what you do. Okay, now when we talk about swing trading is a type of trading that is not long term like position trading, although it's not as short as the lower type of trading which we call intraday. So this is in between. You'll be looking at placing your trades and leaving it for like a week, 2 weeks, maybe a month for the most part. That is what we call swing trading. Now for swing trading, you want to focus on time frames like the daily, the 4 hourly. By 4 hourly, I mean you are going to concentrate on what the market is doing every 4 hours. Okay, you look at 4 hourly, okay, and you could look at 8 hourly, what the market is doing every 8 hours. All right. So these are some of the things to consider when looking at the type of trader you want to be. Now for intraday trading is largely what a lot of us do, right? I call myself an intraday trader. So what we do as intraday traders is we analyze the market and see what the market wants to do for that particular day, a day or two, all right? And place your trade and expect that the market will play out in that very day. If it doesn't play out that very day, you expect that by the next day the market has played out. So that's intraday trading. So what you do as an intraday trader is you focus on the lower time frames. So I want to see what the market is doing every 1 hour and see what the market is doing every 30 minutes, right? Those are the kind of things I want to look at. So for intraday trading, you are looking at maybe the 4 hours for the view. You're looking at the 1 hour. Okay, you're looking at what the market is doing every 30 minutes. M30 represents 30 minutes, all right? So we have position traders, we have swing traders, and we have intraday traders. These are the 3 types of traders you have in the market. Now, the question is, which one should you focus on? It all depends on the type of trader you evolve to be and also the time you have. For people that don't have time to sit down with the market maybe on a daily basis, you might want to consider being a swing trader. But for this course, we're going to be concentrating more on the intraday trading strategies. Okay, and then subsequent for the advanced, the advanced class, I will show you how you can adapt it for the swing trading, right? So pretty much these two where you find a lot of people swing trading and intraday trading. Okay, now also I want you to remember that I told you the market moves the trends. That for trends we have uptrend, we have downtrend. And I also said the market moves sideways sometimes to give us consolidation. All right. Now, when you are trading, there are different ways you can trade. Now, for some people, they want to trade when the market is actually trending, whether going up or coming down. We call them trend traders, or trend trading is what we call that. So if your type of trading is you want to know where the market is going and then trade exclusively in that direction, that is trend trading. Okay. Now, also remember I told you the market does not move on a straight line. So it moves and then comes back a little and continues that movement. Now, say for example, the market was moving up and then it got to a point that it could not continue the movement and then retraces a little bit before the next movement continues. This is what we call retracement. Some people actually specialize in trading this part of the market. So they want to see when the market is reversing, and that is what they want to trade. We call this reversal trading. And the third type of trading is what we call range trading. Some people will prefer to trade when the market doesn't have a defined direction. So they want to pick the tops and bottoms. So these are the three types of ways you can actually trade the market. What is my advice? The best traders have recognized that trend trading is the best way to trade. Like the saying goes, trade with the trend. All right. So, but then the way the trading strategy is, which when we get into that, I will show you how you can maximize trends. And also, when the market wants to reverse, you can actually take advantage of it, but still taking note of what the market is doing in the trend. I usually will not encourage you to trade in a ranging situation. All right, thank you.